All right, welcome everybody. Doug with the LincolnList.com. This is the weekly stock market review. We're going to talk about last week. We're going to talk about this week. We're going to talk about stock ideas, everything in between. This is for January 16th. Lucky for us, we get the Mondays off, so please do enjoy. So let's just talk about this market. Let's just look at the SPY. This thing just keeps on going. I mean, we really haven't had a red day the whole year. We had like a little tiny little speck, I think it was on Wednesday, of like a little opening drop. And as religious as it has been, the dip got bought up, market almost rallies back to green. And that's the condition that we're in. The muscle memory of this market right now is that every single red bar that shows up on the smallest of chart gets swallowed whole by buying. Whether it's people, whether it's algos, it makes no difference. So where I'm going with this is we all feel like we need to be top callers and bottom callers. Like, when's the top? Where's the bottom? But as a trader, you can't worry about that. And the reason that you can't is because this is something that's completely out of your control. Whether you think it's a scam, whether you think it's political, doesn't make a difference what you think it is. It's reality, and you can't change it. We can't change it. I know I get caught up in this sometimes as well. But the only thing you can do is react. Now, for us in the room, the go-to trade this year for sure has been, I've just been buying the E-minis. E-mini and the YM here, the Dow futures, and I've been buying the E-mini futures. And it's been a while since I've been actively trading, probably since 2005 till I was seriously active in futures trading. And the reason, because you've got stocks that go up and down, that's fine. You know, one day could be hot for Tesla, but like, for example, it was red on Friday. Facebook, a great example, $8 down at the open, a pretty big flush to start with, but still the overall NQs, the rest like Amazon and Google, they were just ripping to all-time highs, and the NQs were still green. So when it comes to buying the dip and you're in a melt-up market, to me, the easier trade is buying the dips on the futures market. And if you don't have a futures account, you don't want to take the risk of the leverage with the futures, you can just buy UDOW, UPRO, the SPY itself, whatever instrument you choose. There's ETFs out there. But for us, that's just been the go-to strategy. Every single fade into a moving average, every single pull into any kind of VWAP or any short-term thing, it just seems like this market constantly gets bought up. And that's all there is to it. Now, the interesting thing about this, and why you really can't worry about it, is because at the end of the year, it's like the market's been going up for years now. That's why everybody talks about buying the dip. But towards the end of the year, like the last week of last year, 2017, it was all about those tax cuts. Right? The market was constantly rallying on tax cuts. And as soon as tax cuts get passed, the market starts to trail. Now, not flushing. It didn't really get a good flush until right there at the last day of the year. But you started to see this selling in the market. And that kind of started to lead you to believe that that was going to continue on into January. The January, just a calendar, one day of the calendar, just one date on the calendar was going to change the whole complexion of the market. And I kind of thought, well, we'll probably get a choppy market or, you know, a nice fade or something like that to begin the year if the tempo continues. But no can do, man. I'll tell you what, it's a good thing I trade what I see and not what I believe, because about 99% of what I believe is wrong, and, you know, my trades work out fine. But since the bell opened up, January 2nd, this thing just has not stopped. So it is until it isn't, guys. That's all there is to it. Will it go down one day? Probably. I mean, even a 5% correction right now takes us back to only the beginning of December. I mean, we're on this amazing pace right now. If the market continued on there, it would be up over 100% this year. It'd be like world record pace. So yeah, it won't last forever, but as it is until it isn't, and you will have unique times in the market, therefore you got to take advantage of them. Now I'm going to throw a few stocks out there because I'm a buyer of any E-mini, YM, market dip, drop, or anything that builds a support. I'm a buyer of that. Until that trade stops working, I'm in that trade, and that, of course, that changes daily. A couple of individual stocks that I like. And I'm trying to stay as much as I can to the long side right now because I love shorting. Most of you know I love shorting. I love parabolic shorting. But The problem that I've had with that, no shame for me to admit, is that you short it and you're getting 20 cents or 30 cents. You're putting up such a fight because stocks right now are not pulling back, and it's just easier to, when the flow is this much to one direction, it's just easier to go that way. I want to put this one back up on the list. If you guys take a good look at this chart down here, there was a nice peak around the earlier part of this year, about the first week. You were roughly around this 165.5, and you got a nice solid pop, really strong close on Friday. If you can get some strong volume going over that 166.80, I think you're going to see this thing. I mean, clearly on the chart, there's no resistance in this all until you get to the highs, which is like 170.60 or 171. I mean, so you got some breathing room to the upside. It's crossing the 10 and the 20 moving averages on the daily, bouncing off the 50. It's really a classic range break setup. And in this market, not saying that that's going to always be this way and it's always going to be that way for every stock, but in this market, we've seen this kind of pattern. When they want to jam, it seems like when they break range, they go firing right back to all-time highs. Look at NVIDIA, look at OLED, look at those stocks. When they break out of that range, it's just people pile on and they just don't want to get rid of it. Now, I'm going to go here. It's been so long since, I remember like, was it 2012? Apple was a great day trading stock. 2012, 2013, I think it was. Can't remember. But since then, it's just kind of been more like a Microsoft. It's just been doing its own thing. It's gone up, don't get me wrong, it's gone up a lot this year. Not this year, well, this year too, but last year. But it hasn't been that beta where you can get real big premium on the move. Like if you get a good candle, you might get 30 cents or 40 cents, not $4 like you can on Tesla. But look at this chart here. You've got almost what's turning out to be a quadruple top. Now, the thing with Apple is it has lagged its peers. When you're looking at Facebook, NVIDIA, anybody in tech space whatsoever, you know, huge rips in Amazon this year. Netflix, for God's sake, the thing is like going through the roof. This thing has not quite done that. And I would expect as we approach earnings season this year that all of these are going to run into earnings. You get a clean break right here where you are at the highs, which is, I got to squint to see it, I think it's 170, 177 there, 177.30s. You're free and clear. You're probably going to get a pretty good run. Hell, it might even be a pretty good swing trade. Another high and tight flag setup here is WB. I'm going to put WB up here on the list. Kind of the same thing. You see how it's building? This is what OLED did the other day. Let me see if I can actually pull up OLED right here. Nice flag. And it's good for a break. You had a nice little flag right here to OLED. And then as soon as it broke out over there, you see you got a really, really tall breakout. And that's what these stocks are doing. The thing is, when they're breaking out now, you know, breakouts have been like a 50-50 trade. But in this market right now, they're more like a 90-10 trade. When they break out and they get violent candles, like really huge moves. So you got this WB. You're going back to the highs that go back to 1121, back to good old Thanksgiving. You're at this 121.68 area. And then you're just kind of hanging right there. So you get over this 121.68, you break out of this range right here. You can see you got some bottom wicks bouncing off the 10 moving average. Another setup like wind, ready to make a range break. The China names kind of took a couple of days off. They were pretty strong on Friday, like YY, etc. But I would think if everything stays the same as this market has been, you get a move over top of these highs right here. This 122.60, you're probably going to see a pretty nice size breakout. And I think the last one I'm going to throw out here, I mean, I'm talking about like, oh, Twitter. I got Twitter. I've got Apple. I've got Win. I'm going down the list here. Same thing. I mean, you're bordering high. And it's like, I'm not a fan of buying high a day and high a day breakouts. But right now, this market has, when you've got tight consolidation where you can control your risk and you know what you're looking at, you can make a pretty good play. And like I said, right now, what we're seeing, especially this year, that could change at any minute. That's why I don't take any of this for biblical scripture in stone here. But we've been seeing massive moves. When stocks have been making breaks, they've just been, you know, like Amazon. You get a high a day breakout right here, and they just go. and they don't stop. You got stocks like GBT, and it's like people just pile on candle after candle relentlessly, whether it's people, whether it's algos, makes no difference. That's just the thing. So that's kind of where I'm going. I want to continue to stay to the long side. In a recap, I'm still a buyer of any dip on the market itself until that stops working and you can make some lower lows and show me that you're just fading, then I'll move away from that. And individual stocks, as long as that tape continues, then I think anything that you're seeing with a high and tight flag or a period of consolidation that has tapped 2 or 3 times on high of day that breaks through, it's a long. It is a long. You know, that's all there is to it right now until that changes. So guys, if you need some help, visit thelincolnlist.com. We have free trials to the live trade room. Until next, hey, have a good week of trading. Until next week, talk to you then.